Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Matt D. Fothery, Lee Boyd, and Rob Beller.
Hey, podcast world. We are back, FNO InsureTech, with your co-hosts, Rob Beller, and out there in Texas somewhere is
Lee Boyd. Hi, everybody.
Hey, Lee, how are you today?
You know, I'm good. I'm sitting here staring out a window, and a thunderstorm is about to roll in.
Ooh.
Yeah, it's kind of neat, eerie, all at the same time.
Mm-hmm. Is it eerie because a thunderstorm's rolling in, or because a thunderstorm's rolling in and you are in a building entirely by yourself? You're the only occupant.
I'm in a building all by myself made of metal. So there's a little bit of issue there. But it is a little weird because it's dark outside, the building's dark, and I'm waiting for somebody to jump out and scare me.
For those of you that don't know, we have two buildings in Waco, Texas at our National Operations Center and headquarters. And one that Lee is sitting in is built for about 100 people, I think, or so.
Right, yeah.
And they're all home, except
They
Lee.
are all home.
Except
Yeah.
Lee. So Lee is not only taking care of the facility and everything else, but also doing the janitorial work and some other things.
I am. I take out my trash and I sit here and stare out the window, wait for the mailman to show up or mail lady. I wait for her to show up every day, and I'm doing my part for the company.
Well, we like that you are sitting and thinking and planning.
Mm-hmm.
And speaking of that, we have a honestly very special episode.
This is one you've been very excited about, haven't you?
I'm all excited. I'm a Twitter about it.
Well, why is that? Why are you so excited?
Because we have two highly respected, well-known people from the InsureTech world, active people in the InsureTech ecosystem, major influencers from the InsureTech world, joining us today to talk about what's next. What does all this mean?
Yeah.
COVID. What does COVID-19 mean to the InsureTech world? What kind of effect is it going to have? What does it mean for what's coming next?
Right.
What's the new normal, et cetera?
Yeah. Today's episode will really be a discussion about what's going on and what can we expect and what are we seeing. It's just a really good discussion to help all of our audience come together and think about what is next for us.
Right. What might change? We have Martha Notaras from Brewer Lane, managing partner of Brewer Lane, formerly of XL Innovate, a very well-known person in the venture capitalist community within InsureTech and FinTech, and Caribou Honig, the chairman, co-founder of InsureTech Connect, joining us to speculate and think about, from a very educated standpoint, what does all this mean and where's it going?
Yeah. I'm hoping today we're going to get to talk about what does this mean for startups? How are the incumbents handling this? Where's the money? Is the money still out there? Is there still money to invest? And what is that going to look like in the future? Do you go about it a different way?
Right.
So just a little bit different episode for us, but it's all about InsureTech and it's all about something that affects us every day.
Right. So without further ado, we will move into this and hope you enjoy, as much as we enjoyed producing it, our episode with Martha Notaras and Caribou Honig to talk about COVID-19 and its effect on the InsureTech world. Hey, everybody. We are very privileged today to have two special guests on with us to talk about a big topic that many of us are wondering about and contemplating its impact and effect. And those guests are Martha Notaras, managing partner at Brewer Lane, formerly of XL Innovate, and Caribou Honig, co-founder and chairman of InsureTech Connect, two very prominent people in the InsureTech community and who have their pulse on what's going on in the community. So we thought that it would be great to have both of them on as guests to talk about the question of what in the world does COVID mean to the InsureTech world and ecosystem. And so we welcome you guys. Thank you for being with us today. Where do we find you today? I'm assuming it's at home.
I am working from home. I'm in my basement in Richmond, Virginia.
Safely in your basement.
That's
and
right.
Martha?
And I am safely at home in Los Angeles.
Cool. Well, and we hope everyone listening is safely at home too. And you guys know each other. Yeah, you have a little bit of background with one another. Is that true?
Yeah, that's right. Martha and I were venture capitalists at the same time. She's continued on that path. I detoured a little bit with this little InsureTech conference I'm involved in. But in fact, not only were we VCs at the same time, but as I was thinking about this idea of an InsureTech conference, Martha was one of the first, if not the first person that I floated the idea in front of and said, hey, do you think this idea, bringing together entrepreneurs and the investors and the innovation executives from the industry, makes any sense? Would that be interesting? And lucky for me, she said, yeah. I've always sort of appreciated and still can remember that conversation back in 2015, talking with her about it.
I just regret that I said, yeah, you go do that. And I didn't say, I'd like to back you.
Martha, you look at InsureTech, it is a huge conference. I mean, is that something that whenever he was talking about that, is that something you ever envisioned?
Well, it was interesting because I knew that Caribou was a visionary because we actually met at Money 2020, which at the time had 10,000 participants.
Wow.
And here was Caribou saying, so I'm thinking about doing an InsureTech conference, like Money 2020. And I thought, wow, he definitely has his eyes on the prize because we're not even sure that InsureTech is going to be a thing you can invest in on an ongoing basis.
Right.
But I should have listened to Caribou. I think that was my takeaway.
She patted me on the head and sent me on my way encouragingly. It was very nice.
And what year was that? Do you recall, Caribou?
That would have been October of 2015.
Okay. And I think that's a great lead in for, where we'll start this conversation. And that is we're talking about InsureTech, something that is relatively in the world of technology and investment, something that's in its early stages and somewhat infantile, if you will, or in its infancy. And it's been chugging along at a fabulous pace, as both of you guys know, and you're both integral in. And here comes COVID kind of out of nowhere, really quickly, and has hit, all aspects of the economy. But we're here today to talk about the InsureTech ecosystem, and it's hit it head on. Let's start with the big question, and I'll put this out to you first, Martha. From a very high level, what does COVID mean to this young InsureTech world that you guys are so involved in?
Well, I think it actually means very different things to different parts of InsureTech. So it really depends on what problem you're solving. And I think the other thing that the impact really depends on is where you are in your funding cycle. And I think the companies that have funded before the beginning of 2020 or earlier on in Q1 are in a relatively strong position. I think that the companies that are trying to sell something direct to the consumer are having probably more struggles. I think we're seeing a very uneven performance, but overall a very strong desire to be as liquid as possible.
Yeah, this does call for the old Warren Buffett saying, I think it is, only when the tide goes out do you see who's not wearing a bathing suit. Like in a world which is flush with cash, where there's just a lot of capital chasing after deals, and where the incumbent insurers and reinsurers and brokers have almost a little bit of anxiety and fear over, okay, we got to do something involving InsureTech. That's a tremendous tailwind, and quite frankly, I think that the tailwind there is reducing, if for no other reason than the incumbents, they've got other fish to fry right now. They've got other things to worry about. InsureTech may have been a top 5 priority, maybe top 3 for a bunch of them. It drops down a couple notches in terms of, okay, what are we going to focus on over the next few months? And certainly the VCs, I think, are becoming more conservative and concerned, and making sure that they've got the capital for their existing portfolio first and foremost before they worry too much about the next company to invest in.
So do you see this in terms of kind of how it's going to affect these companies in the short term, and then maybe in the long term things go back to normal and what they were before all of this got started?
So short term, I will say, in my prior firm, we did a lot in fintech, right? More the banking side things, payments, lending, wealth. I know Martha and her firm do both fintech and InsureTech today. I'll say I think the InsureTech folks, relatively speaking, have got it pretty easy compared to what many or most of the fintech folks are going to be enduring over the next 6 months. So
why is that? Why do you say that?
Well, look, the lending world, right? The lending world, it's not sensitive to coronavirus or work from home per se, but the lending world is very sensitive to the macroeconomy, right?
Sure.
If there's a recession, right, that's a big deal for the lenders, and particularly when you get into these sort of really deep recessions, that's the case. Even payments, right, which is normally one of the more resilient parts of finance and banking and fintech. Even payments, right, the volumes, right, can go down dramatically. I mean, I've watched Square, right, one of the success stories of fintech over the last decade. And their stock price got walloped as people were seeing, okay, well, there's all these restaurants, all these mom and pop brick and mortars that were so enabled by Square from a payments processing perspective, right? All the Square terminals at the mom and pops are just, shut down.
Sitting idle.
Yeah. And so, I think about asset management, right? And, when the Dow is down 30%, that's pretty rough for the asset managing side. By comparison, you look at just the insurance industry, and I don't pretend to truly be an expert in it. In fact, I'm sure I know less about the actual insurance industry than anyone else on this conversation. But commercial insurance, that looks a little scary to me. And yes. I'm sure that the low interest rates are causing conniptions for the life insurance people out there, but not necessarily total destruction.
Martha, what are your thoughts there?
Well, I think that's a really interesting take on the topic, Caribou. In terms of my view of what happens to the InsureTechs, I think so much of this is going to depend where they are in their funding cycle and in their ability to turn down burn in terms of use of capital. Because I think the most important thing is staying alive until the economy turns its attention back to the same issues which will exist for InsureTechs. There are a few right now who are getting traction out of this situation.
Right.
Those include companies that are doing virtual property inspections. I have also heard of some payments companies that are doing well in helping insurers digitize processes that they should have been digitized a long time ago, but now suddenly they have remote workers who can't process or shouldn't be having to come into the office to process paper checks. So I think that there are a few standouts who will actually prosper during this time. I think a lot of InsureTechs are scrambling to see how they can make their cash last longer or finish funding rounds, some of which got underway before the COVID was really raging, and some of which have even been launched in the past couple of weeks with optimism that VCs will find value.
And we're starting to see reports of various insurtechs already starting to cut back and tighten their belts as much as possible. Isn't that correct?
Yes, we are. I think we've seen some layoffs, and I think that people are being prudent. Nobody wants to lay off strong team members, but I think that there is always the desire to survive and to make decisions early, as early as possible, to allow a couple extra weeks of cash in the bank.
Martha, we always hear a lot about people saying this is the new normal, and we are now in a world that we never predicted, we never expected to be in. And I'm curious, what does that hold for you? Do you think how will this new world of everything we know affect you in maybe decision making and investments? What do you think?
I think the phrase that I've seen, I was just reading a McKinsey report on this topic, and they don't even refer to the new normal, they refer to the next normal. And I think even the concept that we've created a new phrase, and Dr. Fauci has told us that we shouldn't expect to go back to pre-COVID days. I think we'll see a lot of changes. In terms of how I think it will affect us at Brewer Lane, a couple of things. First of all, I think it will affect the businesses that we find most attractive. And that has to do with how compelling their use case is, how they look at selling, and where they are in their development cycle. So companies that are deploying virtually, obviously, and that is most of the companies that we invest in, those kinds of companies will be in a stronger position. And companies that are able to withstand 18 to 24 months, maybe even longer, of no new funding will also be in a stronger position. So somebody who is developing a product now, ironically, could be in a stronger position than someone who is rolling out a product. I think the other thing is it's going to come down to one of our theses, our investment theses, is around enabling incumbents. And I think that one of the things that means is that companies that have a truly compelling solution for traditional insurers that solves a problem that they have right now, those companies can still succeed and get executive attention. It's a long-standing, well-known fact that getting the attention of insurers can be challenging. They have a lot of other things on their plate. Right now, I think that statement has just gone on steroids with COVID. So if a startup is coming forward with an also-ran solution or coming up with a solution to something that is priority number 10 in an average time, I think that those companies are going to really struggle. And something that would change for us would be that those kinds of companies that aren't addressing an urgent problem will become much less fundable.
Martha, do you feel like there's still an opportunity for the startups which are helping the insurance companies on the revenue side or just the cost side, right? Because clearly when you have a shock like this, when you enter a recession, cost containment becomes sort of obvious and paramount. But I still think that some startups are trying to build things that will help on the revenue side, but are they fundable?
I think they are if they can offer a convincing argument And particularly, I think this is an area where some level of existing traction and pipeline, which is truly believable, is going to be more and more important. So that, for example, a company that has multiple customers and is able to do a land and expand strategy so that a significant amount of their growth could come from expanding existing customers will be in a much stronger position than someone who is earlier in terms of their launch or who makes single sales to each of these companies. So I do think I have a lot of general optimism around some of the solutions. I think what is really changing here is the timeline. And as I say, you're attenuating a timeline where you're in a situation where your sales cycle was already long.
All this makes me think about a interview that Rob and I did with Chris Cheatham with Risk Genius. And he talked about InsureTech 2.0 and how after all this is done, a new world of InsureTech could come out. And it gets me thinking about current InsureTech companies pivoting within their current role into solving a different need. But then even now there's a whole new need in these insurance companies, a whole new problem of working internally, right? What do you, I'll ask you, Caribou, first. What do you think that InsureTech 2.0 could look like whenever the next normal comes about?
Well, I do think it is really interesting how the consumer auto insurers are rebating, right, in not quite real time, and that I don't know how exactly that shows up in 2.0, but I think there's something to it, and you could argue that like the pay by mile kind of auto insurers, right, automatically do that for their customers, and in that sense, they've already embraced that model. I think that there's this might accelerate a push towards transparency. Right, one of the things that I think Lemonade gets fair credit for, as an example, is their emphasis on transparency. Both about what's going on within the company, but also making real strides in terms of the transparency to the consumer, right? So that their policies are at least more understandable, if not completely understandable, by a normal human being. And I think in many ways that follows from a philosophy around no surprises, right? A reasonable customer should not be surprised. They might be disappointed, but they shouldn't be surprised when they find out, oh, I'm not covered for that. And it's sort of the mirror image of the auto insurance companies starting to issue these rebates that they didn't formally have to, right? Is then you're also finding, especially on like the commercial interruption side, I think at least some businesses are finding themselves kind of surprised to hear, oh, I'm not covered for that, right? I'm not covered for my business being completely interrupted by this COVID thing. And again, it's not that the insurers don't have the sort of language in the policy. It's just like it wasn't actually understood by the customer. Like I've always said, I love being part of the insurance industry. It's just fundamentally a good industry. But one of the few places where I think it's sort of suffers at times as an industry is that the customers don't actually understand what they're buying.
Right.
And thus they get surprised when
they find out when they have a claim.
That's right. And that is the wrong time for someone to find out. So one of the aspects here, one of the downstream long-term consequences might actually be a push at the, whether it comes from the regulators or more likely from sort of the consumer advocacy side, to really ensure that there is reasonable understanding and that the policies are reasonably understandable by a normal, typical customer, not just a typical customer's insurance lawyer. That would not surprise me.
Martha, we spoke briefly the other day about how this, what Caribou just brought up, how it could affect the more established old school insurers, this whole business interruption catastrophe that's going on. What are your thoughts on that?
Well, I mean, I think I have a couple of strands of thought on that topic. The first one is I think most traditional insurers have very clear language in their policies around pandemics that they're not covering business interruption. And what we have is we have legislatures who feel aggrieved on behalf of businesses that are legitimately hurting, and they want someone to cover it. There are certainly discussions in several states that the legislatures could potentially change the contract that was entered into and force the coverage of a business interruption for pandemic. The problem with that issue is that the economics are such that you could wipe out the entire capital of the insurance industry by changing that language.
Yeah.
So it's not a solution. It just puts another industry in a world of hurt.
Right.
So it doesn't help solve the problem. And that's why I think what you would probably have to see through this is more similar to what the federal government did after 9/11, when the insurance industry came and said, we can no longer cover terrorism risk. And there was a program that was drafted called TRIA. And in fact, the insurance industry is already talking about PRIA, which would be pandemic cover coming from the federal government, so that the businesses get that business interruption risk covered, but we don't torpedo the incumbent business insurance industry in the meantime.
Kind of like what the NFIP does for flood?
Only better.
Well, there's that.
But yes, it is similar to that. The one thing, in case you're interested in, the reason that the NFIP has troubles is because the NFIP program is calibrated for non-catastrophic loss. It is only calibrated to cover average loss.
Is that still how it's done?
Loss, but its economics have to absorb catastrophic loss as well.
Right.
Yeah. And I agree with what Martha said there around, like, the right answer is not to retroactively change everyone's contract to what consumers or businesses might have thought it included. Right. I think that would be, as she says, a disaster. I also think to your question there around, like, how does this industry transform how it gets business done? How does it work? Like, there's this whole movement, right? This little work from home thing, right? And yeah, I've been working from my basement for a lot over the last few years, but gosh, it seems like everyone is working from their basements now.
Right.
And I think that actually is something that's going to be persistent, right? Not to the same degree, of course, that it is today, and certainly nothing specific to the insurance industry, but all these companies, whether InsureTechs or longstanding incumbents, I think they've been forced to put their contingency plans into place, and I think they are figuring out what actually works and what doesn't, and they're discovering that, at least in some regards, right, working from home does not have to be systematically destructive to productivity. It doesn't make sense to work from home necessarily 5 days a week in normal circumstances, but I will not be surprised if just how work gets done, particularly in a service industry, right? This is not assembling cars in a plant. That's
Correct.
hard to do work from home. I don't see why you can't carry over some of the practices that are implemented now in contingency over to regular business as usual, at least for part of the work week. And maybe that's actually a really good thing for the bottom line of the companies, I don't need quite as much commercial real estate, as an example, and could be good actually for the employees as well. Right, I don't need to do the long commute 2 days out of every 5.
And not to mention the environment. I mean, for us, we're in Sacramento, California. The air has never been cleaner, or not in recent history. So there are a number of upsides, and one of the things that we're discovering in our own business, in the business that we work for, because we've had almost everybody go home and working from home, our productivity is good. It's a very pleasant surprise. We've always held the idea that everybody has to be here, although I ironically I am not. But our headquarters is in Waco, Texas, and we have 2 big buildings where we house everybody. But what we found is that it's working really well without anybody there. And
But I also wonder if everybody's working at home, people are driving less. So let's say 50% of the people who are working at home now stay working at home. What if we all have to come up with a plan that half of our employees work at home, so we're always prepared for a pandemic whenever it hits again? How does won't that also affect insurance companies? I mean, do they have to change the way that they write policies, knowing that people are home more and people are not using their cars as much? Does that lead into a new world of InsureTech like Metro Miles Metro Mile, where they're able to write more policies because it's now I don't have an hour commute. I now stay home 50% more. What is y'all's thought on that?
Every change is an opportunity. I mean, there's a reason that many of the best companies, many of the best venture-backed startups get formed in the course of a recession. Right. The tough times, the challenges, often are a great breeding ground for creative people to figure out what comes next. What can I do to actually help the world adapt to this change, right? And create value. And so, every change is a dislocation for people too, right? So I wouldn't want to minimize, right, that there's pain and suffering associated with that. But I'm also fundamentally an optimist. And, I think that with those kinds of macro changes, right, creates opportunity. It pushes people out of their comfort zones and perhaps accelerates some trends that were on their way, but would have taken a decade or two, takes a month or two. Telehealth, right, is a great example.
Absolutely.
Right?
Great example.
We've been talking about bending the cost curve on healthcare, right, for a couple of decades, I think. And, in places that's been done. But I bet telehealth is one of the best opportunities to bend the cost curve on healthcare, and the cost of delivering healthcare. And there was all this conventional wisdom skepticism around whether it can be effective. And of course, there's certain instances where it can't be, right? Just like there's certain instances where, to really get work done well, you got to be in person for part of it, right? I say that as a guy who's part of, assembling people together for a big event, so I'm a little biased. But with these changes, with people forced to confront their assumptions about how to get healthcare, about how to get work done, right? Now we're actually forcing people to stare at some facts around it, not just their assumptions.
Martha, to pick up on what we're talking about here, do you see this creating new opportunities and new areas that will emerge as a result?
Oh, I definitely do. I think that there will be new problems that we haven't considered in the past. I think the other thing is, and maybe Caribou alluded a little bit to this, I feel like there is also an open-mindedness that comes out of realizing that the old way we were doing it didn't work. And I feel as though the incumbent insurance companies have spent the last 5 years thinking about whether InsureTech was really a thing, whether it was a threat, whether there were ways to work together. And I think that the consensus has been there are certainly opportunities to work together. Going into this crisis with that openness, I think will end up in a situation where incumbents feel more comfortable turning to InsureTechs and saying, you're more advanced on the technology side. Can you help me with this? So I think that there's going to be openness throughout that ecosystem because people are all thinking about it. I think the other thing that might drive new ideas is there is a much more awareness of risk. And I think we alluded a little earlier to the fact that life insurance, people are applying more for life insurance. This is obviously a challenge at the moment because a lot of that can't be done entirely digitally. But I think that suddenly consumers and companies are looking around and saying, a lot can change in a very short period of time. What can I do going forward to insulate myself from those risks, to protect myself from those risks? So I think that there are going to be great new companies that are founded. I think some of those companies already exist and they may come up with new products.
Pivot opportunity.
So Martha, will this change the way you interview and talk to new companies? Before the pandemic, you probably never said, how will you make it through a closure of the world for an extended period of time? Is that something that is now, I assume, on your radar, and then thinking about that which you don't know, perhaps?
Absolutely. I think there are not only different questions that we're asking, because I think very often as a VC, what you really are saying is, here is my money, please spend it according to the plan that we have laid out. And now there is a new scenario where we are saying, is that a necessary expense? And is this the right time to spend that money? So it is a drawing back in that regard. But I thought you were going to go down a different path, which is how do you invest in companies if you haven't already met that entrepreneur?
Oh, yeah.
Good question. What's the answer?
I think that that's one of the issues. How many Zoom meetings does it take to equal breaking bread together?
Right.
One of my companies
the answer
told
is
me they've been doing virtual meetings with some of their customers where they actually send them a bottle of wine for a specific time, and then they sit down to have a drink together.
You bring up such a great point, and I was telling Rob just the other day how I'm reading this new book, Thinking Fast and Slow, and part of what I read this morning was about you instantly make a decision on a person based on what you see. And it's not until you spend time with them to really get to know them. And we've talked to many venture capitalists who say the best way to get to know an entrepreneur is to spend time with them, get to know them. That does bring up a whole new problem for you if you're only able to see from the waist up, right? I mean, only the shirt that they have and their setting, you're not able to get them out and really get to know them. That is a new problem I didn't even think about.
Although, let me chime in here. Again, I said I'm an optimist. The positive spin on this is venture capital has been criticized, and I'm not in a position to know whether it's been criticized fairly or unfairly, but it certainly sounds legit. Venture capital has been criticized for essentially investing in entrepreneurs who look and sound very, very much like the VCs themselves, right? And that applies to things like gender, and that applies to things like ethnicity, and that applies to educational background and the like.
Right.
And the the ability to break bread with someone in person would not surprise me if that's actually sort of a reinforcing of the sort of bias towards investing in people who look and sound and feel like me. So there's a chance, again, the optimist view of this, that by changing the dynamic about how an investor gets to know and trust the capabilities and assess an entrepreneur, as that shifts to something different than the in-person sort of experience, right? Maybe it becomes more rigorous, more emphasis has to be placed on the back channel diligence to talk to their customers and the employees and things like that. Maybe it becomes a little bit more objective in some ways. There's a chance that this shift to getting to know them in different ways than in person might actually open the aperture a bit.
Yeah, Martha? What do you think about that?
So, Caribou, I've also read some of the same studies around whether in-person interviews narrow the lens in terms of anytime you talk about cultural fit, that very well might be a code for someone like me. So I do think that there is a potential that not meeting face to face would open the aperture. I worry that one of the things that we are likely to do is call each other up and say, "Oh, hey, Caribou, do you know Lee?" And then I am going back to the exact same thing that you were complaining about, where I am reaching out to a member of the club to find out about somebody who's already a member of his club, and therefore I haven't really achieved a more open view of people than what we had before. But I too am optimistic that people will be able to make better decisions and maybe more objective decisions without the unconscious bias that each of us carries around with us. So that could be a potential very positive outcome. And in some ways, that's the same kind of unexpected positive outcome that we're talking about when we talk about companies identifying new problems after a crisis or even in the middle of a crisis, that they are then able to build really strong companies out of. And it's very possible that we will end up making better investments because we will be more thoughtful about the entrepreneurs that we invest in.
Yeah, and make no mistake, the quality of the entrepreneur is never more important than when you're dealing with a crisis like we're dealing with now.
Right.
It's the old saying, man makes plans and God laughs. Well, an entrepreneur can make all sorts of plans and the VC can back those plans, right? And then God laughs, and here we are.
I love that. I love that little discussion we had there because it really allows us to step back and say, what is the best way? What are we doing? Is there a different way? I do have one more question that's popped in my head I want to ask you both. For years, and I don't think I can actually go back and say, I think I can say I actually heard somebody say this once, but I've always felt like the larger incumbents have sat back and said, we are tried, true, and tested. We know what's ahead of us. We've been around for 50, 100, 200 years. We are prepared for what's happening. And the startup companies who are selling insurance are not as prepared, or they think they know, but they really don't. What are you seeing right now? Are the larger long-term companies, are they making it through better than the newer InsureTechs?
Each one has their own power alley, their own powers of advantage, right? And I think it's right that the long-standing incumbents, right, they do have a resilience. They've been through these cycles. They've got a natural mindset around how to get through these things. They understand a stress test. I think on what they're not typically is nimble, right? That sort of speed and agility is not what they're known for. On the flip side, that is what startups tend to be known for, right? You ask a startup, how'd your last stress test go? And they're like going to look at you sort of with a blank stare. But if you ask them, look, how many weeks does it take you to assess a situation like this and decide if you got to do a layoff or just what, right? Their answer is going to be weeks. What weeks? It's how many days did it take us to assess the situation? And so it's not that I don't see one or the other is, always advantaged. It's just that each one has different ways of dealing with a shock like this.
Martha, any thoughts on that?
Yeah, I mean, I think that one question is, will the going forward, as each of them has been through this traumatic experience, will they appreciate each other more? Or will each of them sort of go back in their corner and say, being well capitalized is a good thing, and you don't have to be agile? But I really do believe that that people who are sitting at the incumbent insurers are thinking, we were able to get through this because of our capitalization and because of what we've been building up our capital to do over all those years. But we could have reacted better if we had more agility. How do we go get more agility? So I actually do think that there is a potential that this brings those two opposite sides of the ecosystem together.
I have just a couple more questions we want to ask you guys. You've been so generous with your time today. I want to ask quickly about valuations. And I'll start with you, Martha, since you're more active in this. What does this do to valuations? Does it have an effect?
Absolutely. And I think that it has it. If you look at the public stock market, of course, you see that there is a lot of volatility in how investors are valuing all companies at the moment.
Right.
I think the other thing that for InsureTechs specifically is that the uncertainty of projections for certainly 2020 and then on a compounding basis into 2021, all of a sudden you have taken a high degree of uncertainty and made it almost an astronomical degree of uncertainty. Or maybe you almost say, whatever you've done to date in 2020, I can give you credit for, but it's hard to see what else you're going to be able to deliver in 2020. So that when you talk about valuations, there are two components. One of them is, what are the financial results and the expected financial results, and the other is, what's the multiple I am going to apply to those. And I suspect that because the first one, the actual projected financial results that number is going to be lower, then by definition, valuations will decline. I think everybody knows this. I don't think that this is an unfair topic to talk about. And I don't think that startups are surprised about this. I think startups who are raising money now are truly trying to be humble and prove their case and look for a fair exchange with their venture capitalists, which may mean raising inside capital, raising from people that you have known in the past, maybe that haven't invested, but that you have known in the past, and also adjusting your expectations about how much capital to take at this point versus waiting and taking it when the picture becomes clearer. I think everybody is kind of in this together, but I think valuations will definitely decline.
Yeah. Flat is the new up, right? And that applies to valuation, right, for a funding round. That also applies to performance, on the revenue line, right? If you've got some startup that is actually able to maintain some meaningful revenues through Q1, Q2, Q3 of this year, that's actually pretty good.
And then there's going to be those startups out there that are kicking themselves because they think that they blew it on timing. Now is not probably the best time to be in the money raising business. But I wanted to give you both one last an opportunity to comment or share a thought or wisdom that we haven't hit on yet today, if that's the case. So please, just open mic, however you guys would like to close out, any thoughts or wisdom that you'd like to share with our audience.
So from an operational standpoint, right, I think that we're in a mini ice age. Right? Everyone's a little bit frozen up because uncertainty is just so massive. We're starting to get a little less uncertainty. The pandemic curves are starting to behave and be actually modelable, right? The sort of financial markets are getting a little bit more manageable, and we're starting to see, the various financial and monetary authorities step in. But I think that until the uncertainty, right, gets within bands that we can sort of wrap our heads around, it's going to be very hard for anyone to make any major decisions, right? Whether it's doing a partnership, doing an investment deal, what have you. If I were to try to find a metric around, okay, at what point does this mini ice age thaw? I'm looking at the VIX, right? The volatility index of the S&P 500, and basically saying to people I know, until the VIX falls below 30, you have to assume that no one will make any commitments anywhere, and that you probably should not make any commitments anywhere. Once the VIX falls below 30, all right, we're in a normal-ish situation again. But until then, business is likely to be frozen up.
Martha?
Yeah, I mean, I think for me, the real question is thinking about why are we doing it this way, and are there bigger problems that I can be going after? So it is around envisioning what you want the future to look at, but absolutely what today's task is about surviving through what Caribou refers to as the Ice Age.
That's great. Thank you both. And with that, we will bring this to a close. And a very, very big thank you to both Caribou Honig and Martha Notaras for taking the time today out of their busy schedules and joining us.
Thank you all so much.
We appreciate it.
A total pleasure.
What a pleasure to have Martha and Caribou on with us today, and that whole enormous library of knowledge and know-how that they represent to help kind of contemplate the next normal.
I couldn't agree with you more. A lot of times in our podcast, we're interviewing companies about exactly what they do. And today was just a great discussion that really affects every one of our listeners. Every one of our listeners is thinking, what is the next normal? What does the future hold? How am I going to change, and what's going to be available? So it was a great discussion just to really open up everybody's mind that everybody's thinking about it. And as Martha said, the next normal is what's on the horizon.
After the podcast, we talked about volatility, and what a crazy time of uncertainty that right. We're in. And so all we can do is kind of sit here and think about, what will it be like? Where are those opportunities? And like Caribou said during the podcast, these times are what great ideas come out of.
That's exactly right.
They give birth to the tension and the stress and the pressure and the unforeseen new world give birth to new opportunities.
Yeah, yeah. And I wholeheartedly believe that there'll be great opportunities that'll come out of this. There'll be great ideas. There's super smart people sitting at home saying, if I only did this. And I encourage them. To do that, help make the world a better place, help prepare us for the next time something like this happens. History does repeat itself. I encourage the dreamers to dream and to do.
And with that, we will say thank you for being with us. Thank you for subscribing. Thank you to Martha Notaras and Caribou Honig, who graced our microphones today. And we wish you all safety and health, and look forward to being with you guys on the next normal. And until then, we'll say
goodbye, everybody.